Hello and welcome. This is Tracy Z with NoteInvestor.com and NoteInvestingTools.com. I'm excited to be here today to talk about the seller carryback note market. We just had released the 2018 statistics from Advanced Seller Data Services, and I put together this special slide deck to go over some of the key stats that came out of this release of data. So how big is the seller carryback note market? Well, this is all based on 2018 dollar volume, and we go back and look at some statistical analysis as well. So here's what we're going to cover today. How big is the owner carry note market? Key trends over the past decade, the average loan amounts and loan to values, the note creation by property type, what 10 states make up 69% of the volume, and comparing mom and pop to seller financing pros. And then we'll finish with some great marketing resources if you're someone who's interested in buying or selling seller financed real estate notes. So let's start with the basis of what this data is. This is based on county recording data. It's public record, so it's information obtained by Advanced Seller Data Services from the county recordings. And it is based on a seller of property who was also the lender. The seller agreed to be the bank. Instead of the buyer going out and getting a new traditional bank loan, the seller agreed to accept payments over time. These are also called installment sales, owner will carry, seller financing, seller carryback, lots of different terminology, but all comes down to the same thing. The seller agreed to be the bank. They were the beneficiary on the deed of trust, or the mortgagee on a mortgage, or the seller on a recorded contract for deed. Understanding that unrecorded contract for deeds or land contracts wouldn't be included in this data because it's based on county recording data. It is provided by Scott Arpan of Advanced Seller Data Services, and it's based on 2,137 counties reporting out of the full 3,007 in the U.S. So you'll see some of the counties either don't report the data electronically, or they're very small rural type counties where there's not a lot of activities, so it just doesn't make sense to mine that data. They are also first position or wrap, meaning that the seller might have owed some money, sold subject to basically on a wrap, or it's a first position. It doesn't include the small second liens where maybe the buyer took over the first and then there was a small second. Also, the notes are $30,000 or above. So without further ado, how big is the seller carry note market? Well, it's $25.9 billion, yes, B with a billion, 2018 dollar volume. So let's break that down a little bit further. What were some of the trends? Well, the total number of notes created increased by 2% compared to the 2017 counts. Now that's based on the number, not the dollar volume, but the number. The dollar volume of the residential note category was up 20% over 2017. And a lot of that had to do not just with the count, the number of them, but also that the average loan amount had gone up as well. Texas, Florida, California, and Arizona were the top 4 producing states out of all 50, and that was the same as the prior year as well. And the number of multi-note creators was on the rise. So 82% last year carried 1 note, 7% carried 2 to 3 notes, and 11% carried 4 or more notes. So all of those I thought were interesting trends. So let's break this down a little bit more. Here's a chart that shows the seller financing usage since 2009. And you can see that it has gone up substantially after the subprime mortgage meltdown. That makes sense. There was fewer banks making loans and more sellers carrying back paper. And then we see it started about 2014 when it reached its height to start to taper down and get to levels more like the about 2011, 2012 levels. And then in 2018, we see it ticked back up a little bit. That's based on the $25.9 billion volume and also the 91,605 filing count in 2018. And this chart, just so you know, it happens to be based on the filing count. So let's take another look at this data based on categories. So last year in 2018, the residential category what made up 54% based on count and 37% based on dollar value. So about 49,168 of that 91,000 we talked about were residential seller finance notes, and the dollar amount was about 37% or 9.59 billion. Then we look at land. Land is another category that has a lot of seller financing. It made up 13% of that volume last year by count and 29% of the volume by the dollar amount. Commercial is another area. It made up 15% by count and 21%, 5.49 billion, by dollar volume. And then there is another segment that is just undefined in the records that were scraped by Advanced Seller Data Services. They were still seller finance deals. It just wasn't readily apparent for certain states what kind of property type or what kind of county property type was involved. So you definitely could see that if you went and looked individually for each filing, but just for the data that was scraped, we can see that this is how the percentages broke down. Now, if you want to take another look, here's a look at by each category: residential, commercial, land, and that undefined category since 2015. So we see $20.7 billion volume, then it went to 20.8 in 2016, 22.2 in 2017, and then up to that 25.9 billion in 2018. Now, what about the average note amount? Well, for residential, the average note amount was $195,062, up from $184,922 last year. The average loan to value was 81%. That means that people were putting down on average 19% when they bought with owner financing. Now, this is based on the sales price, and it's only based on areas that the states had disclosure of sales prices. So again, it's based on the states that this data could be scraped from easily through the records and the county filings. So, but still, I find that fascinating. People often think that seller financing only has 0% down, and while that's certainly possible, there's lots of notes out there that have a good down payments. And as time goes on, of course, properties, depending on the market, appreciate, they get more equity. But this is just based on average loan calculated from all states based on sales price. So on the commercial category, we can see that buyers were putting even more down, almost 25%, because that average loan to value amount, which is the balance of the note divided by the sales price in this case, was 75%. And it makes sense, the commercial note average amount was quite a bit higher, $407,363, which actually was a little bit of a drop from the year before, but much higher than residential. And then land as well, bigger down payments, a 74% loan to value. Last year, the average note amount was $605,000 on land, which is quite a jump from the 2017. Some kind of big land purchases made some anomaly in those statistics, as normally the land note average had been more about that $264,000 amount. So big jump there for that last year. I don't expect to see another year of it being that high. So I thought that was interesting as well. Good sized down payments in all three categories based on the 2018 averages. Another thing fascinating is that it's the old 80-20 rule, in this case I guess 69-31 rule, but the top 10 producing states made up 69% of the notes created, and the remaining 40 states made up 31% of the notes created. So we can see there's certain states where there's always consistently been way more seller financing going on than some other states. And we can break that down by state. So once again, Texas came in the number one spot. Based on count, it made up 22.7% of the volume last year in 2018. Florida came in number 2 at 10.4% of the volume, and California came in third at 10.3%. The next section that we look at, North Carolina came in at let's go to number 4. I skipped one, sorry. Arizona came in at number 4 at 4.8%. North Carolina came in at 5th at 4.5%. Georgia, number 6 at 4.4%. And Washington State, number 7 at 4.2%. And the next segment that were pretty close in numbers, number 8, Oregon at 2.8%. New York, number 9 at 2.6%, and Pennsylvania, number 10 at 2.3%. And those all together made up that 69% of the volume based on count. And if you want to get even more detailed, you're wondering, how did my state average in there for counts for seller financing. The report does break it down into each state as well, so all 50 states. I put this in the order of most to least, but you could also be sorted just based alphabetically as well. And that is all available for download at noteinvestor.com. And the last thing we wanted to look at is types of notes by the creator type. So we can look at multi-note creators. I consider those to be professional sellers that are regularly using seller financing. These are sellers that created 2 or more notes in 12 months. And we can see last year they went up to 18% in 2018. The prior year 15%. Before that it was 19%. Then 15% in 2014, 12%. And the blue column, those are single note creators. They only created 1 note in 12 months. We tend to think of those as mom and pop note seller financing creators because if they're just doing 1 in every 12 months, most likely it was a property they owned, maybe lived in, and sold it with owner financing. And people who are doing it regularly are more on a professional level, and we tend to see we get better results when we market to them differently. That makes sense. So what are some marketing resources for this? Well, you can create or purchase a list of people who carried back seller financing, and you can market to them, most commonly being direct mail. Those lists can be purchased from notesellerlist.com. That is Advanced Seller Data Services. It is not a company we own, but I definitely appreciate Scott Arpan providing these statistics and definitely want to give his company a shout out for that. And we've used his services ourselves personally to buy different lists of seller finance notes. If you're looking for marketing templates, tips, and tools, we invite you to come on over to our site, which is noteinvestor.com, and we also have noteinvestingtools.com. This is where you can find the report available for download, along with different marketing ideas. We also sell some very affordable trainings and monthly memberships where we provide copies of our marketing letters and postcards and scripts, and we provide website services for note investors, calculation courses, all kinds of things that investors look at, including over 300 free articles on our noteinvestor.com blog. So we really appreciate you joining us today for this little walkthrough of the 2018 stats. And if you have any questions, feel free to reach me, Tracy at noteinvestor.com, and you can come over to our website at noteinvestor.com. Thanks and happy note investing.